Greetings, welcome to another YouTube tutorial video, guys. In this video we're going to break down what I was looking at this week, the week of the 18th, because today is the 23rd. It's a Saturday. Guys, I recently did a little mini series about scamming and different opportunities and stuff within this industry and others you guys can just check out. But with that said, guys, let's move into the tutorial looking at what we did this week. Right, it's the end of the week, just doing a quick review. Let's go. Welcome. As I said, we're just doing a tutorial video. We're just looking at some signals that are sent in the trade Copier group and the signals group, of course. And the trades that I took on the trade Copier actually, and the ones that are sent in the signals group. So first trade that we took was March 19th. I believe was I think Tuesday or something like that. I entered a Euro GBP trade. So let's look at that. This is the trade that I was looking at from then. The thing is though, I've been wanting to try and buy this from the beginning of the week, which was from the Tuesday, which is somewhere around here. But then the market, has been ranging from then and actually bought on Thursday. So that was a problem. But nevertheless, we're going to just do a quick run through of what I was looking at on the Euro GBP. I'm going to select a different chart, same Euro GBP, but with a different broker to then analyze it. Firstly, guys, you already know whenever you're doing analysis. If you didn't know as yet, you do a top-down analysis, right, of every market, every chart that you're looking at, every currency pair, every asset. You do a top-down analysis. All right, guys, this might be a little bit more difficult. I need a new mouse. I'm using the touchpad, which is a lot more difficult. So you do a top-down analysis. I generally like to go on the monthly. I've been telling people in the free group this for a long time. Whether it's within the week, beginning of a new day or whatever, I'll just start with the monthly. So that's just me. You can start with the weekly if you choose to, or the daily. I just generally look at the monthly to see how the market is distributing, and we know that we are generally right now we're close to end of month, right? The market soon close the monthly candle because we're now on the 23rd of March. So the monthly candle, this candle right here, will close soon, which is something to note and be mindful of. If you guys know what the order block is, if you want to take a mental notation of where the order blocks are, support, resistance, or trend lines are, you can. I usually don't emphasize putting any markings on the monthly time frame, because then you have a lot of markings on the chart and it can be messy, right? I'm just using the FXCM as example for this, but it's not necessarily like the best price on the trading views, but I'm using it nevertheless for example. Right, I have mine marked on on, so you can try use that if you wish to. I always tell people that. So we already started on the monthly. We said that the market was creating low lows, low highs. If you guys already know about that, that's perfect. Low lows, low highs, and this kind of creates a relatively equal low right here. A lot of people call it double bottom. Something to know. Generally, in order to create that double bottom, you have to have that little bounce up, right? So then you can say this is a touch of this support that was created down here. I'm not going to put a mark in there, but just have that in mind, right? So have that bounce up. Generally, when we have these lows like this, it marketing to want to breach it, which kind of aligns with the fact that the market is coming down, right? Lower low, lower high. We want a lower low to be created right here, but the market creates a low bottom. The market tends to reach these because we have dense liquidity down here. So the market will want to seek into that, right? Fine. So the market bounced up a bit, creating that double bottom. Good. Now we're going on to like the daily time frame. This is where I usually kind of put 1 and 2 markings on the chart. So on the daily time frame now, we'll still have that same representation of price just as weekly and the monthly, where the lower low, lower high, lower low. And then we have a potential lower high, to form there. I was looking for a buy because of how price was represented closer down to here, which we want to get into. So I have the market lower low, lower high, lower low. Then the market starts to break this high. Though it's a week, it still breach it, because if we go on a small time frame, the body closes here. Though I know we're on a larger time frame, we'll just have a week, and the closure of the body is important. The week is also important, right? So in creating this higher high right here, we're expecting a changing character, just break structure, but people call it BOS or changing character. And when things like these happens, things like these happen, expect the market to come and create a higher low, right? So the market did create that higher low, expecting the market to go higher, did not do that, kind of create a double top right here, and then came down. Now, I was making note of the double top, just like the double top or just like the double bottom or the relatively equal low. The market creates these things so that they can seep into it. Now, I was just fixed on the fact that this was such a perfect double top. It's much more perfect on the on up, bear in mind. This one as a bit is a little bit higher, I believe. Right. So what I did know is analyzing this is that I knew that the market would come up here to kind of reach this. As again the price is kind of strange here, but just bear with me for a bit. We have the relative equal I somewhere up here, right? It's not marking. Oh, all right. So we have the relatively equal I somewhere up here. We have the possible change in character because this high is higher than this one. They don't have the higher low, right? Did not reach it, but create the relatively equal I. That also give me a perfect indication that we should get some buying soon, right? The market then came down a bit lower, testing this 4-hour order block, which was very, very important, by the way, guys. It did not reach this low, but it tested 4-hour order block. So it means that it's not continuing with the trend. It keeps above this low. This is very important to note if you understand structure on a whole. Structure is very important to understand, guys. Though we learn about this, the smart money and the liquidity and all these things. Remember the basics, the structure and price action. Still important, right? No use the liquidity and order block and all these things to just generally override structure itself, right? Bearing that in mind. Now, with this bounce, I was looking at the buy right here, definitely, because this was like I think the previous week or week before that. But we're coming over to closer to the actual price in which I was looking at. So I believe the week started somewhere around here. You guys probably know about Fib already. I drew a Fibonacci line right here. Bear in mind, none of this happened as yet. If you don't know, there's a golden ratio with the Fibonacci between the 50 and the 61.8. If you don't have that as yet, you can put that on a Fibonacci tool. If you're a person that uses Fib, I was based on the analysis that I'm going to show you again, is when the market pulls back to this, I wanted it to buy it or TP3 up here, right? So this was practically the analysis that I had on it, right? So I wanted to buy from Tuesday, which was right here. The market kind of tricked me. It went up again, kind of reached its high, came back down, and it was kind of like just raging for the entire week, well, majority of the week, and into Thursday, the market kind of tapped into that zone again and then buy. So essentially, the setup was either I'm buying it in this box, stop loss below, and targeting TP1, which is right here, TP2, which right here, TP3 right here. That was something along those lines I was thinking, right? Instead, I think this was during the London session. I was like, yo, if the market does not come all the way down, I'm going to enter somewhere right here. Put the stop still below here, but bear in mind, the risk is not too much. It's like a 23 pip risk this, right? And then going for like 50, which was still not too bad. So even if you get a little bit of a drawdown, I'm fine with that. Though down here is the ideal entry point, right? That's what I was thinking. And the risk would be a lot better around 9 pip, 10 pip. You can even extend a little bit for more breathing room, go up to 12. Right. So that was a setup, guys. I'm going to show you the Euro GBP. No. Something similar. I mean, I put the setup somewhere right here. But yeah, it's something along those lines I was thinking. But the market end up selling to that point, to the box right here. Same box I drew between the 50 and the 61.8. And the extension level was my TP3 and the market, just like clockwork, hit that TP3 and I was like, good to go. A simple setup, right? Looking at my thought process doing that, guys, that's exactly what I was thinking. There's nothing else to it, to be honest. I mean, just experiencing, understanding that the market, that's how the market behave. Yeah, simple. And also in the group, guys, I was even talking about the different news release that was supposed to have. So I generally give like news updates and stuff in the group. So when you have like CPI and these things coming up, a lot of people tend to do be mindful of that. So I generally just kind of give updates as we go along. regarding the news, so you can check out for it and how it will affect the market as well. There are sometimes I will trade the news, but I don't really recommend it a lot of the times, especially it depends on which volatile news we're looking at. So the next trade was, yeah, it was the next day. GBP USD sell. Now let's look at that for a bit. All right. So this was GBP USD sell. Not that, not that. And again, guys, I mean, I need a new mouse. I'm using mouse pad, so it's a little bit more difficult. So this is the GBP USD sell right here. And in looking at this trade, it's kind of weird. Though we'll get like, let's see, we'll get like 30 pips out of that trade, like 30.1 pips out of that trade, right? The thing is though, with this trade, I end up closing somewhere right here. Right. When we were on the box, it was kind of giving a bounce, which I didn't like. Even though I expected a rejection, I didn't like it. For me, it did give a little bounce, but it's still a little bit further down. In my mind, I believe that the market would reverse, and it did reverse. I know that this would be like a very serious level. Let me tell you why I think the market would have reversed at that point. Because of my analysis from the beginning of the week. Because this was my analysis, right? The week started up here. We did get some selling and stuff, right? And my analysis, I think I did it on Monday. So the market was somewhere here when I did the analysis. And I was like, yo, the market will come, touch this level, and then bounce up. If it comes to this level, it might bounce up and then sell. But my main analysis is that the market will touch this level and bounce up. So in my mind, if the market comes up here, it may just give us like a higher low and rise. So that was my main reason for saying that the market may not break this. So I ended up closing somewhere up here rather than getting it all the way down here, which was fine. So I'm going to quickly analyze this going on. Let's use FXCM. Why not? Not going to do top-down analysis, just like the Euro GBP one. I'm not going to do that. I'm going to do just go a little bit closer in, because I don't want to take all that time doing that. You guys probably get the top-down analysis by now if you didn't get it. Just bear in mind that right now, especially right now, the month will close soon, so that is something key to note, right? All right. So actually, let me remove all the giants on this. Yeah, let me remove all the giants on this. All right. The level that you guys were seeing, yes. So this is it now. It was actually a weekly order block that I marked off right here. I'm just to show you the power of these things, guys. Everything comes hand in hand. Like, yo, when you learn everything, I put a proper strategy to it, then it'll be good to go. This is the order block that I marked off. It looks a little bit better on the Owanda, right? But let me zoom in a little bit on that so that you guys can see it, because it looks better on that. This is what I had, this weekly order block, right? This is the order block that I marked off. Why I expected a buy. Now going back to FXCM, right? It looks a lot better on the Owanda, don't it? Right? This is the order block that I marked off. Going to 4-hour time frame now. All right, I expected the buy on that. The market bounced up, right? Of course, I could have got the buy from there. I missed it, to be honest. I think it wasn't really my trading time. But that's fine. That's absolutely fine. Now, what led me to try and sell the market right here? I do believe that the market was going to continue downwards, but the main reason why I thought that right here would be the best place to sell it was because of this order block right here on the 4-hour time frame. 4-hour time frame order block is right here. Very, very important point here to sell. So I marked that off. I was looking at it for a while, and I believe that the market was a little bit lower than the order block. It was somewhere down here because it was not yet London session. I think this was this was 12 o'clock actually. Yeah, this closed at 12. Right, it was not yet London session. I wasn't ready to trade that. I was waiting until 2 o'clock because daylight saving shift. No. So when the market started this new 4-hour candle and started to sell, I waited until London session, and that's when I got in, which was somewhere right here. Now we see this 1-hour order clock. I expect the bounce, but that's fine. I wasn't even scared about that. It was a simple trade in knowing that I was going to take the sell right here. My stop loss was going to be above this order block because I believe the distribution for this day would be down. So at target was back to this low. I wasn't being too greedy. I expected it to go down a little bit further. Not fully take into consideration that I had weekly order block marks right here. So I think this was my last take profit. The entry was right here. My stop loss was right above this high because I felt like the distribution would be low down. I don't believe this was the high of the day. Yeah, I think this was the high of the day actually. Yeah, I think so. I believe this was the high of the day or something like that. I entered somewhere around here or here, somewhere around that region I entered. I'm not absolutely certain, but what led me to be confident with my stop loss, and this is a 16 pip stop loss, and this is rough estimate by the way because we're going to look at the setup shortly, was that in using the Fibonacci, guys. I mean, the Fibonacci is a powerful tool. If you guys know how to operate it, then like perfect. But if you don't, you can learn how to use it. Not saying that you should, but just try it out. If you don't like it, then that's fine. We'll draw from the swing high to the swing low, and this is between 50 and the 61.8. So I was pretty confident when I saw the rejection to this zone, which is why you see it on the actual setup. This was a level marked off, right, between this zone, and the market did reject, right. So I was like, all right, cool, we're good to go. Coming to think of it, I think my entry was actually after the rejection though. Right? I think I got it a little bit late, but that's fine. In getting that rejection between this zone, I knew that if we're following this is the true range of the market, and we know that the market should not break this high because this is a high we'll go off of with the fib, right? And I was very comfortable with that. It's just that if we should look at the reason I didn't think the market was going any lower, right? Put the fib from the swing high from the low to the high. This is the next fifth zone, which is where I saw the actual bounce, and I was kind of like, yo, this may not continue up. And the market did the rejection between this zone, and it went up. All right, pretty simple trade. Let's go on the actual setup now. The GU setup, and there we go. This is what actually took place. Pretty simple setup. That was the second trade that we looked at this week. So the third one was let's see. The third one was it was the Euro GBP buy again. I think this is the second time I decided that, you know what, let's go in again for this. Actually for the first one, I did actually after the market spike up. I think it was over here was the first time. This is the second setup by the way. The first time was somewhere right here and the market spiked up and went down. Somewhere around here, I decided to say, you know what, let's close this. The first setup was somewhere around here. The buy went up, and because the market was kind of ranging, we have the small trickling of the candlesticks with the green candlesticks coming up, and then we have the strong sells. I was like, you know what, maybe just leave it alone. And this was we were going closer down to the day because we're in this trade for a long time actually. So it's heading closer down to my outside of my trading time. I was like, you know what, just leave this alone. Second setup entered right here actually, and I will even show you this in the chat too. This is the second setup entered right here. The market kind of played around a bit. This was, I believe, news, and then it just kind of spiked up Thursday and then hit on Friday. So yeah. But this is the same setup from the same analysis from the previous one. So yeah. So I don't need to go over that analysis. All right, the next trade was the GU trade, which was sent on the 21st. So this was Thursday now, right? We're going to go into that a bit. Just take a quick look at what it was. Of course, it couldn't really hold this long, carry the market all the way down, but let's get into this right now. No, the aftermath of what took place with this GU sell, the market went all the way up. It was kind of, I mean, maybe scary to a lot of people, but when I saw this market up here, there was something very special about it, which I literally paid keen attention to it. My analysis from, I think it was the beginning of the week with the buy coming all the way up here. Let's look back at that again. I had some levels that were very important marking up here. So let's find those. Why I had those levels. All right. So in getting that bounce coming up, right? Let's look at the fib again, because the fib is kind of important, you know. I mean, it's important to my strategy. I know a lot of people understand it. We have a lot of people who don't understand it. So let's look at it for a bit. All right. So remember again that same golden ratio, that same golden zone, guys, between the 50 and the 61.8. That's right here, right? And that's very important. When you understand these things, you know how to look out for it. You know how to spot them. This level was in the back of my mind. I believe I removed it after a while, or you can even refine. We have this level right here, this order block within that 15 and 61.8 is a 4 hour zone. You kind of make it a little bit smaller. Zooming in on this a bit, we are in the 1 hour time frame. Very important. Mark that off. And I was expecting the sell somewhere in this region. Not saying that I 100% expected the big rise coming up and then sell coming down, because actually I missed that. If I was around to take that, I would enter right up here, but I missed that. It was literally right before the London session took place. The market was here, and I was like, I was watching it, and literally, bam, I take my eye off it, just like probably 30 to 45 minutes, come back, and then we see the market spike up here and all the way down, which is why I got the sell. I got the sell right here. I got the sell right here. Now, the reason for my stop loss, I knew that this was the eye of the day. The market literally during the London session breached the eye of the different sessions prior to that. And so if that's going to be the eye of the day, they would know that the market's not going to breach it. So I was like, all right, this is the top, the peak. It was roughly like 15 pip risk or somewhere around about. Now, in terms of understanding where to put your tape off, generally use like probably fib or order block or something to create like to have like that TP level. And for this GU trade I was not so much confident in the TP, which was like probably the first time that's happening. I didn't have anywhere solid to put the TP. So one thing I resort to when I don't have a solid area to put the TP is the moving average, which is what I did right here. The mark I placed the TP right on the moving average. I would believe it was like it was definitely the 1 hour moving average. Right, I place a TP right there just in case, and I think that's the safest bet if you don't have any place to put a TP, or well, not necessarily stop loss guy can fake out. So, but for the TP, put it at a moving average if you don't know where to put it, right? So that's pretty much this trade. I mean, this is one of the simplest trade too, apart from the GJ one. I think we'll just look at a while ago. Yeah, this is very simple as well. And this just draws back your understanding of the market, understanding the session highs and lows, the daily highs and lows, understanding the breach, what takes place when this happens, yeah, the high and low of the day, Fibonacci, market structure, very important. Some price action. I didn't focus much on price action if you notice, but my TP was somewhere down here, stops up here. It's a nice 1 to 2 trade. Of course we could have got all the way down here, and this was a brilliant trade, right? We could even dissect it a little bit more, looking at the relatively equal lows here, which was also what boosted my confidence in this trade. Relatively equals, I knew that market was going to reach it. Another nugget, think about that. Another thing that to share with you guys to assist you in knowing if you should scale in or when to scale in on a trade that's already gone. Think about this too. I mean, I can even dive deeper in this in another video, but look at this. Using the same Fibonacci. Bam. This is between the 50 and the 61.8 again. So if you miss that initial sell right here and the market pull back to it, bro, let's check it at this zone and then look at that. Boom. You even have a longer distance to take profit too. You enter right here within that box. Anywhere within the box is fine. Where to put a stop loss? I mean, guys, begging you so much nugget right now. Like, it's a lot. Let's like a pip stop loss, TP all the way down here. That's a 40 pip trade. You could even, upon entering right here, extend this take profit down here, right? I mean, you probably wouldn't know that from before, even TP right here, but extend the TP after the market come and reject it here and expect that the market to sell further. And you see the market start selling, enter right here the wick, extend this take profit area to here. Know that you have a new range working with, and you can ride that coming all the way down. Right, and even coming even further, if you're one to leave an open TP and just allow the market to run, then that's fine. That's absolutely fine. But this is the original setup. Let's go back on the GU trade. Tell me if it looks just like it. That's what I was thinking when analyzing this. Stop right and the moving average on the 1 hour time frame. Let's look at it. Stop right and the moving average on the 1 hour time frame. That's exactly my trade setup. You can see for yourself. Right. Oh yes, I did a GJ one as well. I forgot. The GJ one was the same morning. Same morning. It was shortly after the GU. So let's look at GJ. Yes, this is a GJ sell. This was also perfect. A perfect sell. Alright, so guys, I'm going to cut this video short. Made the other part in a part 2. We get part 2 soon. We're going to cut this right here and we're going to look at the remaining trades before we end out to the end of the week. Right. So we're going to possibly dissect GU, GJ, and yeah, the last GU trade for the week. All right. So with that said, guys, peace.